This is the Scrap Metal Commodities Recycling and Economic Report by BENLEE and Raleigh Goldsboro Recycling, October 16, 2017. Last week, commodity prices and economic reports were mixed. U.S. steel production rose, remaining well ahead of last year and similar to the lower rate of about 2 years ago. Oil rose $2 a barrel to $51.45. Although about 50 is negative for the oil rig count, so the rig count fell by 5 to 743. Oil prices are about a third of their high of 2008 due to too much supply and only fair demand. OPEC has now asked U.S. shale producers to cut oil production to get prices up. That ain't happening. Iron ore fell about $1 a metric ton to $60.50 as prices stabilized at the lower level it hit in the past couple of months. Scrap ferrous prices remain lower. With the global economy good and scrap flows coming into recyclers down, we could see an increase next month. Hot-dip galvanized steel remained flat at about $9.85 a ton on steady demand and supply. Prices could remain stable due to the low raw material costs, yet good demand. Stainless steel forged scrap price remained steady at 29.5 cents despite word of upward pressure on prices due to higher nickel prices. Copper rose 11 cents to $3.13 as the Chinese came back from a week-long holiday. China uses about 50% of all the copper in the world. Copper's up a big 9 cents this morning to $3.22, a new multi-year high. The 5-year copper chart shows copper is at that 3-year high it hit about a month ago. Copper inventories fell again, remaining elevated, keeping downward pressure on prices though. Aluminum fell about a penny to 95.7 cents, but remains near its multi-year high in solid demand. Aluminum inventories fell to new about 10-year lows on solid demand, which is keeping upward pressure on prices. Cardboard fell a big $40 a ton as the effect of China's massive cutback on buying recycled material is causing prices to fall. October's U.S. consumer sentiment rose to 101.1, the highest since January 2004, almost 14 years ago, which is helping make the expansion that started in 2009 the second longest since the mid-1800s, more than 100 years ago. Growth should be faster for middle-income wages, yet many say 9+ years of growth is great and just about as good as it gets. Now, importantly, there is a key reason why many people are wealthy and have great homes, great cars, great businesses, and we have a strong military and good but not great roads and airports. We have been spending trillions of dollars and simply borrowing the money. The U.S. federal deficit is now over $20 trillion, meaning the national debt for 326 million people in the U.S. is $62,495 per person, meaning a family of 4 owes $249,980. Therefore, the federal government owes the equivalent of $249,890 for every family, but it's worse. Total debt, including state, local, and personal debt, is about $68 trillion. This means total debt for 326 million is $208,000 per person, meaning a family of 4 is in debt $833,000 plus. Almost $1 million house for every family, and it's all borrowed money. It is easy for many people to feel wealthy. Each family on average owes about $833,000, money that has been spent on pensions, the military, airports, and are going out to dinner this past weekend, which is money not paid in taxes. $68 trillion of borrowed money. The economy needs to grow faster and the government needs to spend less. In 2018, the federal government will spend $5,400 per family more than they take in. Lastly, the interest on the federal debt is about $300 billion, and note the U.S. defense budget is about $600 billion. U.S. inflation rose 2.2% year over year in September. Odds are that it will decline next month due to the key driver was higher energy prices due to the hurricane-related disruptions. Wall Street's main indices all hit new record highs, with the Dow up 98 points to 22,872. Spending on major durable goods should see increases due to the incredible wealth creation in this 8.5-year run-up in stocks. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.